As you guys know, I don't have a sponsor on this podcast, but today the game has changed. I have recently invested in new technology that I believe can change the game for small and medium-sized scrap companies like us. Its name is Nikki, and it's the last receptionist your scrapyard will ever need. I just got tired of our company missing opportunities that were coming across the phone lines at all of our yards, calls that we were paying for through advertising. The problem was we were asking our scale operators to just do too much, but we couldn't really justify the payroll to have one person just sitting there answering phone calls. Now Nikki answers the calls, directs the important ones to our buyers, and answers the basic questions right now. More importantly, Nikki doesn't let big opportunities slip through the cracks while our team is taking care of the scale traffic and our customers. And probably the most important feature is the daily data call log for follow-ups, tracking, and details of every single call. More details coming soon. Stay tuned.
Welcome to A Scrap Life, a podcast solely focused on the hustlers, grinders, operators, and business owners who live and breathe the scrap metal industry every day. Here is your host, Brett Eckhart.
What's going on, everybody? I'm back with Michael Anderson once again. It's been a few months since we've been able to sit down and chop it up about aluminum, and what a wild few months it has been. So it kind of gives us, we got a few things to discuss, and as always, man, I appreciate you taking the time, sitting down, and sharing your 2 cents, your insight with what's going on in the aluminum market, man. So thanks again for taking the time out on this Friday.
Yeah, my pleasure. Yeah, I mean, we took a couple months, and it feels like it's been a couple years with the amount of news and changes in the marketplace. But yeah, it's kind of all started back when the Iran conflict started, and the Strait of Hormuz got bottlenecked.
Yeah.
There's everyone kind of was focusing on the amount of oil that comes out of the strait, right? 20% of the world's oil comes shipped via that waterway. But what a lot of folks don't know is like 10% of the primary aluminum, uh, you know, has that same channel as well.
And would that be the
So
bauxite, like that, or is
it's
that is bauxite an additive for the guys like me that are just, we're used to
Yep.
dealing with old sheet and irrigation pipe and
Yeah. Yeah.
UBCs. Can you explain to me, why that the Strait of Hormuz and it being bottlenecked has such an impact on today's aluminum market?
Yeah. Yep. So aluminum bauxite is what's ored or mined out of the ground, and that's like the primary raw ingredient that goes into making primary aluminum. So you
Okay.
take aluminum bauxite, add a bunch of energy, and you can melt that down into primary aluminum. And so one of the reasons why that area of the world has so many aluminum smelters is because it's so energy rich, right? Same reason there's so much oil coming out of there is the same reason there's so many smelters
Yeah.
in that region. So
'Cause it's a very
it,
energy
exactly.
intense process to make a primary aluminum material.
Correct. Yep, that's
Right.
correct. So, yeah. So, and the obviously ocean freight's usually the cheapest way to move material around. So, oil and aluminum products out of that region have been flowing through the Strait of Hormuz, for the past tens of decades, right? And
Yeah.
now we're running into an issue where, starting in early March, we ran into an issue where that strait was essentially, for all intents and purposes, closed, where ships could not pass back and forth. So, kind of what you found was any of the material, like aluminum based, right? Folks were trying to find other avenues to get aluminum products out of that region. So a lot was being trucked over, like through Oman, and picking up ports on the other side where they had unobstructed waterways. But again, that's there's only so much you can do, and that was adding a lot of cost. And so, naturally, as soon as the strait shut down, aluminum prices jumped up because number one, uh, the world was already in a very, very, very tight market from a supply demand capacity on primary aluminum. Even at the very beginning, heading into 2026.
And the reason for that being because of the tariffs and what was going on the trade side, right? That was one of the
Uh,
main was that one of the main factors behind the aluminum market being a little bit tighter, or the Midwest premium and some of those numbers being where they were, or what was driving that tightness
it
before this conflict?
Yeah, so really what's been driving that is over the past few years, you've seen a lot of aluminum smelters kind of coming offline, ones that weren't very energy efficient with where the price of aluminum was. You saw a fair amount of smelters come offline. So you had a decrease in production. At the same time, you had increases in aluminum. So aluminum is used in a lot more, it's being used in automotive today. It's big aerospace alloy cans. Aluminum growth, across the board has been increasing. So those two factors combined kind of got us to a point where we were in a tight but manageable situation.
Okay.
But then you factor in a supply chain disruption like the Strait of Hormuz, and all of a sudden, like that kind of changes the supply demand balance.
That's
And
it.
and at that point, aluminum prices shot up, premium prices shot up, and I'd say that the more interesting and impactful thing is, as the U.S. and Iran got into this, when volleys were being exchanged with missiles, there's a kind of a tit for tat. You hit this, I'll hit that. You hit this, I'll hit that. We hit some of their steel plants. They turned around and hit a bunch of the aluminum smelters in the region. So EGA has a smelter in Abu Dhabi, and Alba has one in Bahrain that both took significant damage. And I think they're still trying to assess exactly how long those smelters are going to be running at decreased capacities. But from what I'm hearing, it's they're both limping along pretty well, and it's going to be probably about a year
One,
until. So even if the Strait of Hormuz cleared up, you still have structural damage to the aluminum primary supply market. And
gotcha.
and again, going back to some of our previous conversations, where this all ties into scrap is all scrap items, all aluminum items kind of follow that general trend of what aluminum's doing, right? And so what I'm
Yeah.
talking about right now is just what's the high level aluminum price trading at.
Yeah.
And the big thing driving it right now is what's going on over the Middle East.
Well, you and I briefly touched on before we hit record was I think what we've talked about this before, as far as primary versus say secondary material, and where the primary there's definitely a stronger demand, which is reflected in the pricing on the primary side, right? Just because of the kind of the primary markets probably feeling the brunt of this pain, this from whether it's trade tariffs or whether it's war issues, or Strait of Hormuz getting closed down issues. But the secondary market is still, I mean, it's not necessarily tracking as aggressively. And when I say secondary, I'm referring to like an MLC, an old sheet, um, cast, right? Some of these other grades that your common scrapyard is dealing with, and you're seeing, say, a Midwest premium and aluminum price of, say, what did we say, 275 today, right? When you add the
Ish. Yep.
Midwest premium back in that range, give or take a few cents whenever you hear this podcast. Um,
That's right.
for now, until something dramatically changes. So, but anyways, like you're like, oh man, 275 aluminum. I'm still, I'm selling old sheet for, let's say, $1 or $1.05 or whatever that number is today. Um,
Yep.
Depends on where you're going with it. but you're like, why, how is there such a big gap? And are you seeing that gap widen? Because we've talked about that secondary margin widening,
Yep.
Are you seeing it still continue to widen, or are we at a point where is it now tracking, on a more steady basis? Because I looked at, like the average price from last month, because I have some material that's formula priced versus this month, and it's like I want to say like a 13 or 14 cent delta or somewhere in that range from last month average with the Midwest premium to this month average with the Midwest premium, somewhere in, I want to say maybe it's 10 cents, but it was enough that I was like, geez, like that's a big jump in aluminum, right?
Yeah, it
But
went, yeah,
are you seeing it?
261 to 274. Yeah,
What was
yeah,
this? Say
yeah.
that number again.
It was like 262 to 275.
So
So it was like a
12, yeah, so
13
like
cent.
13, 14 cents, or in that range. And so I was like,
Yep.
well, geez, that's a big jump in a month for aluminum, right?
Yeah,
At least it felt
sure.
that way to me. But you're not seeing a 13 or 14 cent jump in old sheet or in UBCs month over month. Like maybe a penny or two. Is that a more realistic,
Yeah. It,
number?
and I think what we're seeing here in the U.S. is just with that high premium that we've talked about on previous podcasts, like you're seeing a lot of material being imported into the U.S. So there is a glut of material. So what we've been seeing is as the aluminum price has been going up, that scrap price had kind of been staying the same or going down.
Yeah.
I do see that the tides are starting to change on that. At least from a old sheet perspective,
Uh-huh.
things have kind of have moved here recently. I was kind of looking at percentage of Midwest transaction, and yeah, I think we bottomed out in April. Maybe in like the 38, 39% of Midwest transaction for old sheet.
Yeah.
It's back up to 44%, which is where it was back in October of 2025.
Okay.
And so, there's a few things that are driving that. I think, one of the biggest things being there's a tightness in the secondary aluminum market. So the secondary grades, your 380 items, there's been a lot of furnaces that have been offline, furnace outages and scrap availability challenges, which have driven up the 380. So you had this large delta between Midwest transaction at 275 or whatever two
We'll just say 275. That's roughly where it's at today, but
yeah,
just in general.
right. And
Yeah.
and where 380, pricing was, but that gap has closed. If I was kind of looking at this earlier today, and if you looked at earlier in the year, there was like $1.10 delta between Midwest transaction and 380 prices, which means that anybody who was making secondary items couldn't pay anywhere close to what the primary mills were paying. So you saw a lot of the MLC, you saw a lot of painted siding, you saw a lot of the old sheet being upgraded into products that were going into those markets because there was such a large arbitrage
Yeah.
in between the two markets.
You could
That gap has,
afford, so you could afford to put some time and effort into the sort, right? Like it made
yeah,
sense. What you're saying, just, for our audiences, there's a point when it comes to scrap, when it comes to aluminum, especially where you just put together an MLC package because you're like, well, it's close enough to, what a slightly better, a 61 or a 63. It's close, it's in the range. Like I can't justify the sort. But then when that price really widens, all of a sudden you're like, well, I can put some hands on it. I can run it through. I can shred
right.
it. I can run it through the sort system, whatever your means of processing is. And there's enough margin in it to do the sort, right?
Right.
Okay.
Yeah. And there's certain items that, regardless of what you're doing from like a sorting perspective, like painted siding can go either direction. And it usually just depends on, you're not going to change how you're processing your painted siding,
Yeah.
but it does impact like what the terminal market, the end product market is for 380 or or Midwest transaction usually drives where that scrap's going. Is it going the primary side, or is it being split between primary and
Gotcha.
secondary?
Okay.
And so, those two have come closer into alignment. As of currently, I think what was like $1.10 delta is probably down to like maybe 65 cents.
Yeah.
So it's closing up, which is putting pressure on those. So you've seen, or we've seen old sheet pricing kind of ratchet back up, iron extrusion prices ratchet back up. Haven't necessarily seen that like on the MLC and siding pieces yet, but
Mhm.
I think it's probably just a matter of time before you start to see some additional pressure on those get pulled as well.
And to your point, I think what's important for people to understand, like, because I mean, I'm just trying to gear us towards like, our audience and people who are they're in the trenches or they're selling their, scrap on a daily basis or monthly basis or whatever. This is why what he just described, what Mike just described, is important to understand that whoever could be your buyer of choice today, because they're really buying for, say, a primary mill, or you got your buyer of choice that you've been dealing with that's usually just a secondary buyer. It's good to have both because those margins and those things and those optionality of where material goes can change. So like who could
Yes.
be more aggressive? Like you like, oh, those guys don't really mess with quote unquote secondary or traditional secondary material. But all of a sudden now maybe there is a little more aggressiveness by those traditional primary buyers. You should give them a look at that
Hmm.
scrap, right? And I think I just want to make that point kind of fairly clear for people like myself is like, hey, this is why it's important to have optionality with your material, especially if you make a good clean package that mills can trust, that secondary, buyers can trust. If you put some time and effort into having a clean package, it does give you that when the market does change or who can be more aggressive on the buy side for you, you know, your material might change direction and it might be lucrative enough, 5-10 cents to be like, yeah, that's a good enough price. 5 to 10 cents on a load is, that's a big, it's 2 to 4 grand, right? I mean,
Hmm.
it moves the needle. So I just make sure when I have people I like to sell to. I have people I'm comfortable they're going to pay their bills. But just know, like, markets change, and that's the importance of why I want to do this podcast with you, because you understand both sides of it. Is like there, someone who you traditionally thought might be out of the market for a certain material, it might be worth a phone call, an email, a text message, like, hey, is things changed on your end, right? Is this an item you're looking for again now, or
Yeah.
vice versa, right? So just
Just because it didn't work 6 months ago or a year ago doesn't mean that it doesn't work today. So it
exactly, yeah,
100% keep your options open. Continue to survey the marketplace because being in the industry as long as I have, I'll tell you, things change on a dime, right?
yeah.
And yeah, people get very ingrained in their mind. Well, this is what I do with this item, and this is what I do with that item, and for the most part, a lot of times there's a reason for that, but it probably doesn't hurt to
I'm
take a look every
I'm
once and again.
100% guilty of that, and that's why I'm a lot of things I say is to remind myself, right? Like, hey, like take the old like take your own advice, like
Yeah,
drink
sure.
your own
Yep.
Kool-Aid. So a lot of the times, like I'm saying it out loud or I'm writing it down and in a post because it reminds myself to to do that. So. Um, but so like so that being said,
Yep.
um, what are you anticipating like moving forward if let's say things categorically stay the same that they are right now? There's not a lot of material moving through the strait. Nothing
Yep.
really changes because I think even if it does, it's not going to happen overnight. You don't just flip the switch and turn a mill back on. It's a
Right.
process, especially if it's been destroyed with a bomb or at least a portion of it. Like now you're talking, I think, not just 6 months or a year, but like a couple years to get everything rebuilt and reorganized. And I mean, are you guys, projecting forward a very still constrained aluminum market, tight supply, tight, on the manufacturing side, but also on just, the supply side as well.
Yeah, and so I think these levels that we're at right now, so I'll again talk about the high level market, aluminum
Yeah.
and Midwest transaction. I think the levels that we're at right now, I don't see a lot that changes the scenario for the next 5 6 months at least, for the balance of the year. Um, we're going to be in an aluminum deficit. Even if the Strait of Hormuz opens up and some of the aluminum out of that region that wasn't impacted by bombs starts flowing, that will provide some relief. But overall, I mean, there was I think about 3 or 4% of the world's primary aluminum production was damaged as part of the bombing, and that's not going to be back until next year.
Yeah.
So
At
yeah, so
best.
I
At best. Yeah.
correct. So
Yeah.
I see, if anything, I'm probably a little bit bullish. I think the ranges that we're at right now, 275, are probably there. If anything, there might be a little bit of upside as time goes on. The reason I say that is it, people reacted to the bombings and the upcoming aluminum deficit, but there was enough material at the ports already. Primary, when I say primary aluminum, I'm talking like P1020, the virgin stuff that's coming out of a smelter.
Hmm.
There was enough at the ports and on the water that the impact of the strait being closed and those facilities being taken offline really aren't going to start being felt until later this month.
Gotcha.
So at that point, I think you could see things ramp up a little bit from an LME and premium perspective. From a scrap spread perspective or scrap pricing perspective, we've already seen. I don't think there's any segment that's currently continuing to widen out compared to Midwest transaction. So as we talked about earlier, I think some of the lower grade items are finding support from export options and low and domestic secondary um, prices. The extrusion market has started to find some level footing, and again, that is tied to the primary production being taken offline. Those primary production facilities just didn't make um, scrap that was being melted. They were making products. A lot of billet was imported into the U.S. To make extrusion products, and with that coming offline, any of the cast houses that can make billet in the U.S. are looking at that now and starting to buy scrap. So you've seen, the extrusion scrap spreads, which were widening. They've kind of found some level ground. I think you could probably see those tighten over the next couple months. Um, as far as like segs like 3003, 5052, I think those have been pretty static. I don't see a lot of changes. And same thing with like UBC. UBC's found some support. We are getting into a high supply time, but so it, 2 months ago I was saying, yeah, things could widen out more. I feel like we've kind of touched the
I
bottom,
found that
and we're
line to where it might start tracking the actual, the top line a little bit
yep.
tighter than just kind of opening the spread up. It can only open up so wide before people find some sort of arbitrage in there somewhere, right? That like, oh, we can do this with this item or
Yep.
whatever.
Yeah,
Yeah.
and one of the big things that's kind of been driving the domestic market has been a lot of mill outages in the U.S. and some of those are slated to come back on in Q3. And I mean they probably have enough scrap. When they when they went down, they've got enough scrap pigeonholed in enough places that they're probably not going to be out buying material until beginning of next year. But just
Uh-huh.
the fact that they're running and not pushing more material into the marketplace
Yeah.
will be overall good for scrap pricing. So
Because there'll be a little bit more demand in there at some point. And
yep.
so on the manufacturing side, are you seeing demand? I mean, everybody wants to talk about AI and AI infrastructure as being like one of the big primary economic drivers for everything commodity, right? Driven copper, aluminum. is that having that infrastructure having an impact that you can see or that on the aluminum side, like they discuss? And if so, just out of curiosity, where and why is that? Like what is causing that?
So yeah, no,
How is
that's an
aluminum
excellent question.
consumed in that process, I guess is my.
Sure. Yeah, there's the yeah. So aluminum heat sinks. It's used a lot for like the framing, the housing that and a lot of the like the fins for cooling,
Cooling.
because they generate a lot of heat, right? So, um, aluminum and copper are very good at conducting electricity, and aluminum specifically transferring heat, right? So that's why you see it a lot in heat exchangers, radiators, things like anything where you're trying to keep something cool or keep something hot. Those are general applications. So a lot of the data warehouses that are going in today um, are are utilizing a lot of aluminum, right?
Yeah.
And copper from a wiring perspective. Uh, Secondarily, I think there's another impact there as well, which we talked on just earlier today, how aluminum intensive the smelting process, or I'm sorry, energy intensive the aluminum smelting process is.
Correct.
Um, AI is also a very energy intensive process, right? So you've got um, there's a suck on energy consumption,
And then competing, right?
and
Competing forces, right? For those
they are.
units of energy, right? I okay, well, go ahead. I see where
Yep.
you're going, but yeah, I
Yes.
like it.
Yeah. So
Yeah.
that is another factor that's kind of laying in the weeds a little bit of what's supporting LME prices where they're at, and from my perspective, one of the reasons why I don't necessarily see a large, I think we're probably in a newer norm, because until there's a bunch more energy that comes online to support all of the needs, there's going to be this buying back and forth, and it's overall going to make aluminum, because it's an energy intensive process, more expensive.
It's like calculating in the fuel prices for trucking, right? Like in order for
Yep,
that truck to drive up and down the road, it needs diesel fuel. If the price of diesel fuel is high, your freight rates are going to be higher,
are going to be
right?
high.
It's the same thing with aluminum, what you're describing, and something I think that kind of gets missed in a lot because people think about the price of aluminum, they think about just the infrastructure, the fins, the aluminum, the heat sinks, the wiring, the racks, everything that that the aluminum is used in that process, forgetting that it's actually even before that that could be driving the cost, and it's the energy units that are having to be purchased, the electricity to
Yep.
run and to run an aluminum mill, smelter, whatever the proper description is. But to actually get it to where it can become a rack or an aluminum heat sink or whatever, and if those costs are high, if the price of electricity is higher, then your price the cost to go buy a new sheet of aluminum for whatever, whether it's siding or aluminum wheel for your semi truck or whatever, it's going to be higher because the cost to produce that item is high,
Yeah.
right? So it's
Yeah.
all the input costs. It's the raw, the bauxite, it's the whatever the scrap that's required plus the electricity, And so I think when people talk about inflation and they talk about the pricing of everything, I mean, it's hard to imagine a world where everything gets a lot cheaper anytime soon, right? Because it's a
Right.
constraint issue. It's a power constraint issue. It's an input constraint issue, and those constraints all at one time. That's why you get 275, aluminum.
That's right. That's
So,
right. Yep.
well, man, is there anything you want to add
It,
that we didn't
it,
touch on?
no, I think so. One thing I think that might be, and you can probably add a lot of insight this to this, because as well, because you guys operate your own trucking company, but
Yeah,
freight today um, is a challenge, right? We're
100%.
seeing this, especially, there's a lot of scrap coming out of Mexico because of the high premium, but it's also produce season. Our logistics team kind of sent out a note just the other day, stating that for every truck that was in the area in Laredo, there were 34 loads of material that needed to get moved.
Yeah.
And that's just it's a crazy ratio. And we talked about some scrap the other day, and I had to get some freight rates, and it's mind boggling when you see the costs going into just moving material these days. And I think, yeah, that's a very, very big piece of of the market these days.
Combine combine fuel, the price of diesel, combine um, CDL, like the lack of, I mean, part of, crackdown on the current administration, cracking down on these kind of people with CDLs that whether they should or shouldn't have them, like,
Sure.
whether can't speak English, but you have a CDL or you haven't went through the proper training or whatever. So you have a lack of CDLs, and then you have high fuel prices, which definitely puts a really, it puts a for example, we have contracts. We have a trucking company, and we move a lot of material via rail, via truck, our own trucks, outside trucks, but just our internal trucks. I think we run internally, let's say 60 trucks, right? Like give or take, local, over the road, like in that range. Our fuel bill has what we paid on a weekly basis, and we have for a long time, so we can get a price break on the cost versus say like a 30-day line. But
Hmm.
it has doubled, like our easily, right? And I mean, I tell my kids that when we come home, they're like, I have a 16-year-old, and my other boy turns 13 tomorrow. And so they're at an age where they can kind of understand what things cost a little bit, and it kind of boggles their mind. And I was like, I've spent $1 million in fuel,
Right.
in the last, 6 months or whatever. It's like, you spent $1 million on gas? I'm like, yeah, just on gas, right? And because for them, $1 million is still a lot of money, right? And
Yeah.
I
Yeah.
think, and for me, it's still a lot of money, but it's crazy to think about when you talk about freight rates, the cost of a new truck, 200 whatever thousand, right? A new trailer, because a lot of your trailers, van trailers, flatbeds, a lot of aluminum, right? So your
Hmm.
cost of equipment has gone up. Your driver wage, because there's less drivers, so that's more of a supply constraint, right? The number of drivers out there, price of fuel.
Hmm.
So all those things combined, it's no different than why aluminum is high and your freight rates are high. It's a supply demand thing, and as long as there's demand to move freight, as long as there's a demand to move aluminum or move onions or move strawberries or avocados, whatever that number is, like it's your price of freight is gagging sometimes. Where you're like, oh
Yeah.
my gosh, it's costing me XYZ amount a ton. So the thing is, in the tire business, we talk tire recycling business, is tires can only travel so far, right? Because of the freight. Well, that distance of how far those can travel is even getting tighter now. But
Sure.
it's the same with scrap, right? Your scrap now is fairly constrained to the pricing and how far it can go. Luckily, the price of aluminum's high, price of copper's high, and you can say that is it chicken before the egg? Is it high because of freight, or is the freight, or are you allowed to? Are you still able to ship it farther because the price is there, right? And who knows which one fails first? But as of for now, I mean, you're to move material is expensive. It's not getting
Yeah.
cheaper. I don't see it. Even if diesel comes off $1 or two, it everything else is all those other constraints are still there. The
They're
CDL, the equipment
structural
cost,
changes that, yeah,
yeah,
don't go away.
those are there, right? And so you
Yep.
you just better anticipate it. And it goes back to like this podcast is for the small, medium-sized recyclers. When you're pricing things out, make sure you understand your freight rates because what looks like a good deal, oh, that guy's 5 cents higher or whatever, right? On this item, make sure you've got that freight rate. And most people are pretty good about it, but you might, if you haven't checked the freight rate in a while because you got a new buyer or somebody that's interested, just run it. Make sure that
Yeah.
that great deal is still a great deal, right? Or maybe it doesn't look as good on paper when you're just matching up sell prices. So
Yeah, no, that excellent point. I mean, as you witnessed firsthand, right? We're not kind of taking, we're getting fresh rates for everything because the
yeah,
market's moving so fast,
yeah,
and we don't want to be caught on the wrong side. Anything that we end up doing from a brokerage side, like there's not a lot of margin there, and if you make a mistake on the freight cost and get whacked, for $1,000 more, like guess what? Like you
yeah.
did it for practice.
And the other thing too, I like, and I think everybody's fighting this battle too. Is you might be selling, let's say, old sheet for $1, $1.10, or whatever that number is. Everybody sells it different, but it's a very cash intense operation now to run a scrapyard, and I can only imagine on the trading side what that looks like. The volume of revenue and dollars that are being exchanged on an
Yeah,
outfit like you guys, right? Pretty good sized, buyer, processor, broker, all the things. Like I can only imagine with your guys' accountants, because I know what my accountants were like, oh my gosh, like the dollars that are moving each way, right? So just be very like cash conscious in how you're doing things, move
hmm,
material, make sure people are giving you terms that make sense. Because if a guy says, "Yeah, I'm 45 days," and you got another guy who's like a couple cents less, but he's 15 days or 10, that could be what makes that deal. And
sure.
so you just got to be, but know that if a guy is saying, "Yeah, I'll pay you in 10, but I need a couple cents to do that," you got to make a business decision on your end, but it may not be the worst decision, right? I mean, selling
For
to a
sure.
mill sounds great until you realize they're 45 days before they put the check in the mail. And
Or
then they're
60.
another
I mean,
five or
yeah,
yeah.
it is,
So
right.
just, all those things, like all those factors have to be taken into consideration when prices get like this. And I just warn, just kind of, I've lived it, I've been through the upside and the downside, just trying to make sure everybody like take all those into consideration with who you sell to.
Yep.
Well,
Awesome.
I appreciate, man. This has been every time we do this, I learn something, and you're always kind of giving me the insight on the other side, and I appreciate it. I hope the people that listen to it, they get something out of it. We'll kind of get back to now that we got Rima out of the way, and maybe get back to a little bit more of a cadence. But for
Sure.
now, I'll take it whenever I can get it. I appreciate you taking the time and sharing your insight with us.
Yes, sir. Can't wait to see how gravely wrong I am 30 days from now. So
Well, I mean, at the end of the day, like if you knew for sure, you
that's
probably
right.
wouldn't be doing that job you're doing right now.
That's
If we
right.
all
Yeah.
knew, we might be on a beach somewhere trading with my laptop and drinking margaritas.
Yep.
All right, man. I appreciate you. Thanks for going
Thank you,
out
Brett.
on him and taking the time and predicting, giving us your thoughts.
Yeah, you got it, man.
Have a great month and talk to you soon.